Hello dear children, welcome to another session of your accountancy class and continuing with our discussion from the topic not-for-profit organization. Today I'll be discussing about the treatment of adjustments when preparing income and expenditure account and balance sheet of a not-for-profit organization. In my previous video I have explained you the steps to be followed when preparing income and expenditure account and balance sheet from a receipt and payment account. That is, given a receipt and payment account and some adjustments, how we shall be preparing the income and expenditure account and balance sheet. So in the process of preparing these, you will come across with certain adjustments. That is, apart from receipt and payment account, there will be also a few adjustments given in the question. So what shall be these adjustments? There may be the adjustments which are mentioned here, and these are a few common adjustments which you will be coming across when dealing with the practical questions. So the adjustment may be relating to an amount of income, which are the revenue receipt. So from the receipt payment account, those receipts which are revenue in nature, taking those revenue receipts, if there is any adjustment relating to that revenue receipt, you have to apply adjustment to it, and you'll have to find out what is the actual amount of income derived from such a revenue receipt. So the adjustment to that revenue receipt has to be applied in order to find out the amount of income. Then another adjustment will be relating to an amount of expense. Similarly, the revenue payment which you are going to pick from the receipt and payment account, for thus these revenue payment, there may be some adjustments. So based on its adjustments, you have to compute the amount of expense or expenditure to consider where in the income and expenditure account. Another adjustment may be relating to consumable items. Now consumable items are certain items which not-profit organization are using on a regular basis. So they are not considered as assets but as consumable items. So if any of these consumable items are there for a non-profit organization like stationery, medicine, sports materials, and in the question you are mentioned about some adjustments to these, then also we have to take the effect of the adjustment on the consumable items. Another adjustment is relating to profit or loss on sale of fixed assets. So when a sale of fixed assets takes place, the sale may not be recorded in the income and expenditure account, but out of this sale, whatever profit or loss is there, that amount of profit or loss has to be recorded when preparing income and expenditure account. In relation to certain items of receipts, the adjustment may be like if any form of receipt which is to be capitalized, if it is mentioned that from the amount of receipt some part has to be capitalized, either partially or fully, then such an adjustment has to be done on that receipt according to the instruction for capitalizing it, whether it is partially or fully. And there also is a common adjustment relating to depreciation of fixed assets. So let us start one by one how to deal with such adjustments. I'll begin with the first, that is the adjustment relating to an amount of income. Now in the last year, when preparing the financial statements of a sole proprietorship, you have deal with adjustments. Now there adjustments relating to income or to say expense was outstanding and prepaid. Outstanding, that was relating to expense. But if you talk about income, which we are discussing now, for income it may be income received in advance or income which is still to be received, that may be called as arrears. Arrears. So for a non-profit organization, a major form of income is subscription. Subscription. So this adjustment is mainly for subscription. Apart from subscription, you can use it for other source of income for a non-profit organization like locker rent also. But this will be commonly applied to subscription, because subscription is one of the main source of income for a non-profit organization. Now, as I was mentioning, like adjustment relating to income may be in the form of received in advance or yet to be received, that is in arrears. And last year you were dealing with these adjustments with only a single amount, but in case of non-profit organization, the adjustment amount for arrears, that is yet to be received, and those which have been received in advance will not be just two figures. You will be given the arrear amount for 2 time period, also the received in advance amount for 2 time period. One will be at the beginning of the accounting year and another will be at the end of the accounting year, for which we are preparing the financial statements for a non-profit organization. So in this case there will be 2 figures for each case of the adjustment. So here we have to be very careful while dealing with those adjustment, because there will be the 2 amount for the same item. One will be for the beginning and one will be for the end. So here you must always remember that whenever we are preparing income and expenditure account, we have to consider the income or expenditure which is belonging to the current accounting period, that is for that accounting year for which we are preparing the account. So we must come to the amount which is exactly relating to the current period. But we are preparing this income and expenditure account with the help of receipt and payment account, and in a receipt and payment account you are getting the receipts which may be for the previous year or which may be for the next year also. So we had to take the amount from there, and then with necessary adjustment we have to compute what shall be the exact amount of income. In this case it is income which we shall be taking in the income and expenditure account. So to come to that figure of income, we are going to now see a working note. So here you are going to first take the amount given as receipts in receipt and payment account. So that amount you are going to take as take from the receipt and payment account, which is given as receipt. So it will be to the credit side of this income and expenditure account. Now after taking this amount from there, now we have to look at the adjustments. Now, as I have mentioned some time back, that the adjustments relating to any income may be that part of income which is yet to be received, that is which is in arrears. We can say that outstanding. Okay, let us make it simple. Outstanding, which is yet to be received, which is outstanding, or it may be which has been received in advance. But for each that is outstanding, there will be 2 figures. One will be for the beginning of the year and for the same at the end of the year, and same for receive in advance. So remember, you are preparing the account to compute the amount for the current year. So this is another rough work that you can do, for the current year. But you will be having some amount which will relate to the previous year. And there may be some amount which is relating to the next year. So you have to keep your focus only on the current year, because what we want to derive is the amount which is meant for this current year. Now you may be given the amount for adjustment in the form of outstanding, which will be in the beginning of the year, for the beginning of the year, current year, and there may be an amount of outstanding which is at the end of the current accounting year. Also there may be amount which is received in advance, received in advance. I'll just mention advance at the beginning of the year and received in advance at the end of the current year. So what we have are outstanding at the end of the current year and outstanding at the end of the previous year. You will say as last year, last year. Similarly, you will have advance at the end of the current year and advance at the end of last year. So these will be the four amount which you shall have from the question to be treated for adjustment. Now coming back to this working note, our focus is only on current year. So whatever belongs to current year, that only we have to add. Whatever belongs to the current year, that only we have to add. Whatever belongs to the previous year to the next year, that shall not be considered. So when you say outstanding, outstanding means yet to be received. But this outstanding, which is in the beginning of the current year, the amount which is showing in the beginning of the current year was outstanding for the previous year. So whichever is outstanding, whenever you see outstanding as a part of this adjustment, remember that outstanding moves or outstanding is for the past, for the previous time. So this outstanding will be for the previous time. That's why I'm drawing the arrow backward. And advance is for the future. So it is going to the future or going ahead. Now, how shall you treat these? Remember that our focus is only on current year. So whichever which is falling for the current year, that you have to add. So if you look at these arrows, which are those arrows which is pointing towards the current year? If you see this arrow, this is pointing to the previous year, whereas this arrow is pointing to the current year, isn't it? So the arrow which is pointing to the current year, those you have to add. Same here for advance, you can see this arrow is pointing to the current year, this you have to add. Whereas this outstanding is pointing to the previous year, so this should be subtracted or less. Similarly, this advance, which is at the end of the accounting year, is pointing to the next year, so it should also be subtracted. So following this rule, if you apply it here, outstanding at the end of the current year, which was outstanding at the end of current year, it is this one. So this should be added. Outstanding at the end of last year, our last year is this previous year, so for the previous year, outstanding at the end of last year was this, and it has to be subtracted. Whereas our advance, for advance at the end of the current year, for the current year end is here, so this advance at the end of current year is meant for the next year, so it should not be added, this will be subtracted. Whereas advance at the end of the last year, which is here, this amount will be in relation to the current year, so it should be added. So in the income and expenditure account, when we have to take the adjustment for subscription or any other income, then this is how we should treat the outstanding, which is at the end of the current year and outstanding at the end of last year. Similarly, advance at the end of current year and advance at the end of last year. So after computing this, the amount that you will find here, that will be the amount to be taken as income in income and expenditure account in the credit side. Okay, so after computing, means taking this amount from the receipt payment account, you have to add less add these figures, and whatever the amount comes finally, that amount has to be recorded in the income and expenditure account. Now the same amount will also reflect in the balance sheet. As you know, all adjustments will always affect two accounts. So one treatment of this adjustment has been done here. Okay. So another treatment of this same figures should also be there in the balance sheet. Now outstanding expense for any for any income, whatever amount is outstanding, that is we are to receive that amount. So it will be treated as an asset for the non-profit organization. Okay, any outstanding is asset for them. On the other hand, the advance which they have received, okay, which they have received in advance, that is a liability. So any subscription or income received in advance will be a liability. But where will be this in the balance sheet? Since you are familiar that there will be two balance sheet, one will be opening balance sheet and closing balance sheet. Okay, because opening balance sheet may be required in order to find the capital fund. Okay, but if you are not preparing the closing balance sheet or opening balance sheet, then this thing you need not to consider. Okay, we have to only focus on this part. But in case the balance sheet has been asked, then this is equally required. So this will be asset, and this outstanding is belong to the current year, isn't it? So it will be treated or recorded as an asset for current year. When we will prepare the current year balance sheet, then in that balance sheet as an asset you will show this amount and the same amount. And as this outstanding is belong to the last year, so it will be prepared, it will be recorded in the balance sheet of the last year. Last year means that opening balance sheet. Remember, when you prepare the opening balance sheet, if any such outstanding figure is given in the adjustment, you have to enter it there. Yeah. The same goes for liability also. Yeah. When you prepare the opening and closing balance sheet, for liability you will take this current year here, and this will be taken as liability for last year. Yeah. I'll continue this lesson. Thank you for listening.